Hello and welcome to the Tax Roundup for March. Inside this month we're looking at two important cases. The first that overturned a previous decision on permanent place of abode. What is a permanent place of abode for residency purposes? The second one looks at the active asset test, dealing with the small business CGT concessions. But first up, we're going to take a look at what actually passed through Parliament in those last sitting days in February. Now remember, these are the last days before the federal budget, and most likely the last days because of the impending announcement for the federal election. That includes the passage of the extension of the single-touch payroll legislation, but also the announcement dealing with the extension of the instant asset write-off. Across to you, Michael.
We're going to have a look at some of the legislation that is either passed or not passed, as the case might be. Firstly, something that has actually passed is the extension of single-touch payroll to all employers, including small and micro employers as well. That start date will be 1 July 2019, which is going to come around very, very quickly. So single-touch payroll has been in place from 1 July 2018 for larger employers, those with 20 or more employees. Smaller employers could opt into the system but weren't forced into it. That is all about to change very soon. Government has passed that legislation, it is in place, and so those new rules, expanded rules, apply from 1 July 19. Now the ATO understands that smaller businesses and smaller employers are possibly a bit concerned about the practical application of those rules. And so the Commissioner has actually come out and provided some personal guarantees around how the ATO will deal with the expansion of these rules. First of all, the ATO has said that even though the start date is technically 1 July 19, they will allow smaller employers to begin reporting through single-touch payroll at any point between 1 July and 30 September 2019. So it provides just that little bit extra leeway for smaller employers to basically figure out what they're going to do in terms of single-touch payroll, sort out a solution, whatever that happens to be. The ATO has also indicated that some concessions and some leniency will be available for a limited period of time for micro employers, so those with 1 to 4 employees, and that might be just simply the owners of the business who receive some wages or directors' fees out of the business entity. For those employers, the ATO is allowing them to basically lodge on a quarterly basis for a period of time and allow that to happen through a registered agent as well. If you're an accounting practice and you're planning on assisting clients with this, just to be a little bit careful about your own obligations and how you manage that. For example, making sure that there's authorisations in place. And the ATO has a bit of guidance and some bit of assistance in terms of making sure that formal authorisation is in place with clients. And the ATO indicates that an annual arrangement is probably going to be okay. So single-touch payroll, it's already here for some, it's going to be here for everybody soon. The other thing just to be a little bit mindful about is the whole point of single-touch payroll is it's real-time reporting of payments to employees and directors, the POIG obligations and super guarantee obligations as well. So it is going to be much harder for employers to get away with not having met those obligations on time. The ATO knows straight away whether an obligation has been met by the relevant deadline or not. So this is, from the ATO's perspective, a great tool for knowing where there's compliance issues. But from a practical point of view, you also just need to be a bit mindful about how this is going to interact with the way that sometimes things might be done with some business clients in terms of tidying things up around the end of the year. Given that this is real-time reporting, just need to be aware of that. Make sure clients are aware that if stuff doesn't happen when it should happen, the ATO is much more likely to discover that and find out about it, and it could lead to other issues pretty soon afterwards. So time to start talking to those clients who haven't been caught by single-touch payroll as yet, figure out how they're going to manage that moving forward. It's really going to fly that time between now and 1 July 2019. So the time for having those discussions is now and very soon, and to start thinking about what's actually going to be done, whether it's a low-cost solution. There's a whole bunch of low-cost providers who are working on simpler solutions for those smaller businesses, but some plan needs to be put in place pretty soon. Now, the other thing, just very briefly to mention from a legislative point of view, is the government has announced an extension to the immediate instant asset write-off for small business entities. It is due to expire at 30 June 19 at this stage and come back to a $1,000 threshold instead of the current $20,000 threshold. But the government has introduced legislation to expand that for another year and also increase the threshold from $20,000 up to $25,000. Now, that is not law yet. There's a bill before Parliament. It hasn't made it through the Senate. We don't know whether that's going to pass by the time the next election happens. If it doesn't, well, it's probably off the table, and we'll wait and see who is in government in terms of where those rules end up. So I wouldn't get too excited about that just yet. Obviously be aware that there's this proposal from the government. We might hear a bit more about it in the budget, which is coming up pretty shortly. So there's an announcement, there's a bill, but it's not legislated. So just be a little bit mindful again of what you tell your clients around those proposed changes and the fact that it's not actually law as yet.
The legislation that enacted the extension to single touch payroll for all employers also brought about another change as well. And that's from 1 July 2019, is that salary sacrifice will also need to be reported through single touch payroll. The federal budget is going to be announced on 2nd of April. It's brought forward this year. If you're on Knowledge Shop's database, you will get your notification for a copy of that, of our advisors edition of the budget. And for members of Knowledge Shop, we'll be sending you a client version as well, which will be white labelled, so you can send that straight to your clients. That'll all be the day after the budget. And now across to that residency case that looks at permanent place of abode. Across to you, Michael.
We're going to have a look at the Harding case, which has gone from federal court level up to full federal court level, and we've seen a bit of a 180-degree switch in terms of the result. Now, the Harding case, you might recall from a little while back, dealt with a taxpayer who was seeking to argue that they were a non-resident for tax purposes. And the federal court, single judge of the federal court, had held that this person wasn't residing in Australia under ordinary concepts, but was still caught as an Australian resident under the domicile test. And the reason for that was that the taxpayer had an Australian domicile, but had not established a permanent place of abode overseas. And the primary reason for the federal court reaching that earlier decision was that the taxpayer was primarily staying overseas in serviced apartments, was moving from time to time between different serviced apartments, sometimes within the same building, didn't really have a whole lot of furniture or personal belongings. And so even though the taxpayer had been in that country for a considerable period of time and had really no plans of coming back to Australia, the federal court said that they just didn't have a permanent place of abode, therefore the domicile test captured them. Now, this was appealed by the taxpayer. Full federal court has turned that decision on its head. So now what we have is the taxpayer being treated as a non-resident on the basis that they did have a permanent place of abode overseas. Now, the full federal court has said that it's quite normal for expatriates to live in more temporary style accommodation rather than buying or entering into long-term leases of property. That's a pretty normal way for an expatriate to live their life, particularly early on after moving locations or changing countries. So that in itself doesn't mean you haven't established a permanent place of abode. So the fact that someone might be overseas living in what looks to be reasonably temporary style accommodation, full federal court is saying that that of itself doesn't prevent you from arguing and basically having a position that you have a permanent place of abode overseas. Now, of course, this always depends on the facts. So for this taxpayer, they were able to show that they weren't a resident of Australia under the resides test, and now that they did have a permanent place of abode overseas. But residency issues are tricky. The tests are difficult to apply, and there can be a lot of grey in lots of cases. So just because this particular decision held that this taxpayer was a non-resident, when we're encountering this issue with clients, we still need to work through those tests very carefully. Remember, there are 4 tests. We have to look at all 4 tests before we can be confident that someone is a resident or a non-resident for Australian tax purposes. So in some ways, this represents a good result for those who are moving overseas and seeking to argue that they're a non-resident. It doesn't mean the process is simple. You still have to work through the rules in detail and have a look at things like these case decisions and the ATO's rulings in the area to reach a conclusion, and make sure that clients who are seeking to argue that they are a non-resident keep documents to back that up. We find that people who struggle to convince the ATO around their residency status, more often than not, it's because they just haven't kept records that strongly support the position they're taking. So still take care with the residency rules, but for those seeking to argue that they're a non-resident, this certainly is a positive outcome.
And now across to our small business CGT concession case, really defining a little bit more about what is an active asset for the purposes of the test.
We're also going to have a look at a case dealing with the small business CGT concessions and focusing on what is actually a reasonably common scenario. And what this case, the Eichmann case, dealt with at tribunal level was whether some land that was used for storage of business equipment could be an active asset and pass the active asset test, then allowing the taxpayer to qualify for the small business CGT concessions. Now the issue here was how strong does the connection between the property and the relevant business activity need to be in order for that asset to be an active asset. Now basically what happened in this case was the taxpayer held some land which had some sheds on it, and the land and the sheds were used for storing equipment that was used in the business carried on by a related party. And the taxpayer argued that that land and those sheds, the property as a whole, was an active asset because it was used or held ready for use in the course of a business carried on by a taxpayer or a connected entity or an affiliate. But the ATO disagreed and said that the connection just wasn't strong enough. Merely holding tools or equipment on that land and using it for storage, there was not a strong enough connection with the business that was being carried on for this to qualify as an active asset. Now, fortunately, from the taxpayer's point of view, the tribunal said that this was an active asset. There was a need for this business to store its equipment somewhere, and that's what they did. They were running a business, they had to keep their equipment somewhere, they used this land in the storage of tools, equipment, other materials used in the business. So the tribunal took a more flexible and I guess common sense and practical approach to the issue around the active asset requirement, particularly for land that may not have what you'd maybe sometimes think is a really integral role in the income producing activities. But the tribunal is saying that that test should be applied on a slightly broader level. So good news for that taxpayer, and there'd be a lot of taxpayers who'd be in a similar situation to this, where they run a business that has equipment and tools and spare parts and whatever it might be, and it needs to be stored somewhere. And so the fact that they haven't gone and rented other space from someone else shouldn't really be a penalty to them. It shouldn't be penalised because they're using their own property to store those tools and equipment. Now we do need to contrast this with another decision going back a few years now, where some equipment and other assets were being stored on land, but after the business had basically wound up. And in that case, it was held that that land was not an active asset because there was no longer a business and those assets weren't still being used in that business. So again, we just need to be a little bit careful. We always need to come back to the facts of the scenario that we're looking at. This does suggest that there's a bit more flexibility around the active asset test and what is an active asset compared to what maybe the ATO's fairly narrow and strict view was, which is good. But always, again, come back to the facts, check the rules very carefully because the small business concessions are very complex. But hopefully this will allow a number of taxpayers to approach the small business CGT concessions with a bit more comfort when they're dealing with situations like this.
And that's the tax roundup for this month. Look out for the budget update. And if you're at the Accounting and Business Expo, then take a look for Knowledge Shop's stand and we'll look forward to seeing you soon. If you're not a member of Knowledge Shop, then give the team a call on 1800 800 232 so you can see exactly what value Knowledge Shop can add to your team and to your practice. Talk to you soon.